Welcome to our Beginner's Guide to Exchange Traded Funds, or ETFs. In this video, we'll cover everything you need to know to get started with ETFs. We're thrilled to have you join us as we delve into this crucial investment instrument. Through this guide, you'll discover what ETFs are, how they work, their benefits, the types available, and practical steps on how to invest in them. By the end, our goal is to have you confident and knowledgeable about incorporating ETFs into your investment strategy. So let's get started on this journey to demystify ETFs. So what exactly are ETFs? ETFs, short for Exchange Traded Funds, are investment funds that trade on stock exchanges like individual stocks. These funds hold a diverse portfolio of assets such as stocks, commodities, or bonds. Unlike mutual funds, which are bought and sold at their net asset value, NAV, at the end of each trading day, ETFs can be traded throughout the day at market price. This flexibility offers investors the opportunity to react to market changes in real time. An ETF structure typically includes shares that represent a proportionate ownership in the fund's holdings. This assemblage is designed to closely track a particular index or asset by employing an arbitrage mechanism, ensuring that the trading price remains close to the NAV. The comparison with mutual funds is quite stark. ETF's continual availability creates a dynamic investment vehicle. But what seals the deal for many investors is the simplicity and transparency of ETFs. Their expense ratios are generally lower than those of mutual funds, making them a cost-effective option. ETFs offer the combined attributes of mutual fund diversification and stock trading flexibility. Stay tuned to broaden your investment knowledge further. Now that we know what ETFs are, let's dive into how they work. ETFs are designed to track an index, sector, commodity, or other assets, and they trade on stock exchanges similarly to stocks. One key aspect is the trading mechanism. Investors buy and sell ETFs at the market price, which can differ from the ETF's net asset value, or NAV. The NAV is essentially the total value of the assets within the ETF divided by the number of shares. A unique feature is the creation and redemption process. This process involves large institutions, known as authorized participants, who maintain the ETF's market price in line with its NAV. When the market price deviates significantly from the NAV, these participants step in. They create new ETF shares when demand is high or redeem shares when supply exceeds demand, ensuring prices stay aligned. This dynamic mechanism helps keep the ETF's market price close to its NAV, providing a transparent and efficient trading experience for investors. Next, we'll explore the benefits of investing in ETFs, how to choose the right ones, and how to start your investment journey with confidence. As we delve deeper into the world of exchange-traded funds, let's explore the remarkable benefits ETFs offer. First is diversification. Investing in ETFs allows you to spread your investments across a wide range of assets, reducing risk and enhancing potential returns. Another significant advantage is the lower costs associated with ETFs. They typically have lower expense ratios than mutual funds, meaning more of your money works for you. Flexibility is another key feature. ETFs can be bought and sold on the stock exchange just like individual stocks, providing greater control over your investment decisions. Lastly, there's tax efficiency to consider. ETFs are structured in a way that allows for greater tax advantages, making them attractive for managing capital gains. Diversification, lower costs, flexibility, and tax efficiency make ETFs a compelling choice for both new and seasoned investors. Next, we'll see the different types of ETFs and how to choose the right ones for your portfolio. Now let's explore the various types of ETFs available to investors. First, there are stock ETFs. These ETFs track a specific collection of stocks, typically mirroring the performance of major indices like the S&P 500. Next, we have bond ETFs. These funds invest in a diverse range of bonds, providing a steady income with less volatility compared to stocks. Sector and industry ETFs focus on specific sectors of the economy, like technology or healthcare, allowing you to target growth areas or hedge against sector-specific risks. Commodity ETFs provide exposure to physical commodities, such as gold, oil, or agricultural products. They're great for diversifying your portfolio beyond traditional securities. Lastly, international ETFs offer opportunities to invest in markets outside your home country. These can be regional, tracking markets like Europe or Asia, or country-specific. Each type of ETF offers unique benefits and can be used to achieve different investment goals. Whether you're looking for growth, income, or diversification, there's likely an ETF that fits your needs. Next, we'll discuss how to start investing in ETFs. Welcome back. Now that we understand what ETFs are and their various types, let's dive into how you can start investing in them. First, you'll need to choose a brokerage. Look for one that offers a wide selection of ETFs and charges low fees. Many popular online brokerages provide this service, making it easy to get started. Next, research the ETFs that align with your investment goals. Consider factors such as the fund's performance history, expense ratio, and the assets it holds to ensure they meet your needs. Once you've selected an ETF, it's time to place an order through your brokerage account. You can choose to buy at the market price or set a limit order to purchase at a specified price. Finally, monitor your investments regularly. Keep an eye on performance, stay informed about any changes in the ETF, and adjust your investment strategy as necessary. Next, we'll address common misconceptions about ETFs to help you make informed decisions. You might have heard people say that ETFs are too complex or only suitable for experienced investors. There's also a belief that ETFs are riskier than mutual funds. But let's set the record straight. ETFs are designed to be user-friendly, offering a straightforward way to invest in a broad range of assets. Whether you're just starting out or have years of investing experience, ETFs can be a valuable addition to your portfolio. And when it comes to risk, it's all about understanding the product and diversification. Both beginners and seasoned investors can benefit from ETFs. Next, we'll recap and encourage you to start your ETF investment journey. To recap, ETFs are a versatile and cost-effective investment option that can suit a variety of goals. Throughout this video, we've delved into what ETFs are, explained how they function, explored their numerous benefits, outlined the various types available, and provided a step-by-step guide to start investing. Now, it's time for you to take the first step. Dive into the world of ETFs and begin crafting a portfolio that aligns with your financial aspirations. Don't wait. Start your investment journey today and reap the benefits of smart, informed investing. Thank you for watching, and happy investing.